All right, guys, we have a lot to break down in this video. We're going to go over 3 companies, some earnings here, charts, some stocks I'm looking at. So if y'all find value, hit that like button, man. Make sure to subscribe, and don't forget to follow me on X as well at Stocks Talk Stocks, and get some free stocks from Moomoo, link down below. Just simply open up your account and fund it with at least $100. You get 5 stocks, each up to $2,000, and you get a free share of SoFi stock as well. So use that link. And with that being said, cheers. Let's dive into it, guys. So it's currently about, what time is it? About 1:15 p.m. and the markets are teeter-tottering, a little bit green, a little bit red here, as we have all of them up a little bit except for the NASDAQ, which is down about 0.25%. And one note here on the NASDAQ, guys, it officially took out the highs from the middle towards the end of July, which you all remember. Those highs were at about 387-ish. So we took those out. We hit 389.50 pretty much earlier in the day. As you guys can see, that was in the pre-market. And since that point, we've pretty much been downtrending all day. I mean, you guys can see lower highs, lower lows, and pretty much the same thing on the S&P 500 on SPY. If I pull that up, yeah, you guys can see we hit a nice little peak at about 451.76 pre-market. All right, and since that point, lower highs and lower lows have been made. Now we're down, or pretty much at break even, up 0.07% now, as the Russell's up 0.25%, all right, and the Dow's up about 0.3%. So those are doing pretty well, but the S&P and the NASDAQ, not so much. So yeah, I mean, look, we're slipping a bit. And on the 4-hour chart, we are a bit extended. Let's be honest here, guys. And we can see we are getting some selling at about 452, which makes sense. That is where we did peak in the end of August, right? Then we sold off a bit, and we also peaked there in the middle of September. Then we saw a big sell-off. So it makes sense. We're seeing a bit of resistance there right now, and we'll see if we push through or end up coming back down, maybe about $5-10 towards the moving averages a bit, which would make sense. I mean, we'll see. Time will tell, guys. And on Triple Q, if I pull that up, let me show you guys what's going on here. Again, we broke out of the highs from July, and now we're a bit overbought. I mean, look, we could pull back maybe towards 375. That is a possibility. Or do we just run straight towards 408, which is the all-time high? We'll see, guys. Time will tell. And, of course, we'll cover it here on the channel. Let me know what you guys think in the comments down below. And let me just pull up some stocks now. We had Target report earnings this morning, and their stock, as I'm sure you guys have seen by now, is up 17%. I think at one point it was up over $20 per share on the day. Now it's up to $129.76. So it's up massively after the company's earnings came out this morning, which I want to break down a little bit here, guys. So let me see the headline numbers very quickly. I think they beat EPS and revenue. I looked at these earnings this morning. So adjusted EPS, $2.10, which I think the estimate was like $1.50 or something like that. They crushed that number, which I'm not seeing it here for some reason. Where the heck is it, guys? But they also beat on revenue, I believe. It came in at $25.4 billion. The estimate was like 25.2 or something. So they double beat on EPS and revenue. And let me see, anything here on guidance? Yeah, it looks like, yeah, the estimate was $1.48, guys, and sales estimate was $25.3 billion. So they beat on both of those, and they see adjusted EPS of, let's see, for Q4, $1.90 to $2.60 versus $2.24 expected. That's good. Very good guidance there for EPS for the next quarter. And comparable sales in the mid-single digit decline. As you guys know, they've been declining a bit here. Let me actually pull up this article on CNBC. Give me a second here, guys. I'll move my big old head a little bit over to the right. There we go. So here we can see that overall, guys, let's come up a little bit. We can see that the big box retailer started to see or stared down the same challenges that it's faced over the past year, yada, yada, yada. Shoppers aren't buying much more than necessities, right? Which has always been a problem here with Target compared to, let's say, Walmart. And honestly, this is why I favor Walmart over Target, is because people that shop at Walmart, they're pretty much shopping for necessities, and they have them at some of the best deals compared to other places. But when people shop at Target, they're getting things that, let's be honest, they don't really need, and people are cutting back on doing that right now in this economy with this inflation that we've been experiencing, right? So it makes sense that shoppers aren't buying much more than necessities, which that's not the best for Target, but obviously they're trying to expand more into the necessities. They still have groceries and all that good stuff, right? But, we'll see how the future plays out for them. But this is, again, why, here we have an ad from CNBC, guys. Let me X that out. But this is why, again, I prefer Walmart, especially if we're heading into a recession or some type of economic hardship, whatever it may be. Walmart's probably going to do better, I think at least, than Target. Maybe not so much the stock. You never know with the stock market. Probably the stock too, let's be honest. But you never really know. But for sure the company will do better, which should make the stock do better as well. But it doesn't always work that way, especially when there's a lot of volatility. But we're not going to get into that in this video, guys. But look, they're hungry for lower prices, consumers are, and when they do make purchases, they're postponing them, such as waiting until the temperature drops to buy a pair of jeans or a sweatshirt. So they're not, I guess, prematurely buying these items, let's say in the summer, preparing for the winter, right? Which makes sense. That's what CEO Brian Cornell was saying. And for the second straight quarter, Target's comparable sales declined, and the industry metric, which also is called same-store sales, takes out the impact of store openings, closures, and renovations. That's essentially what same-store sales is. And the CFO said, we'll see how this plays out. But he said on a call with reporters that the company is laser focused on moving both traffic and sales back into positive territory, which, if you're a shareholder, for you guys watching, I sure hope that's the case. Full disclosure, I don't personally own Target stock, but I hope for sure it works out for you guys out there that do own it. And yet he and Target's leadership team cautioned that won't happen this year, even as holiday shoppers hit stores and websites for decorations, gifts, and more. So they know it's not going to happen now. They have all the models, the data, all that good stuff. I mean, the numbers, they project it out. They know what they're doing. So we'll see what happens in the next year, right? Or the year after that. This might take time. Honestly, it might take time. But that's a little bit there on that side of things. You guys can see here comparable sales dropped nearly 5% year over year as customers bought, again, fewer discretionary items, and digital sales declined by 6% compared with the year ago period. And here are some other numbers. We actually already mentioned these numbers. So yeah, guys, that's pretty much it on Target. We'll see how that plays out. Again, I prefer Walmart, which we have Walmart's earnings coming up fairly soon here. And let me pull up Target's chart. I mean, you guys can see it's still very much in a decline or a downtrend, whatever you want to call it. But if we start breaking 140, 150, that's where the real reversal could come. But until then, guys, I'm not touching this thing in the short term. For all we know, this could easily reverse, in my personal opinion. I don't know. We'll see, guys. This could be the start of the reversal to the upside, but I'm not too convinced quite yet. I want to see a little bit more time go on, and we'll see how it plays out. So Walmart is this week as well, guys. WMT, keep your eyes on it. This one is breaking out into the earnings. The ascending triangle's playing out, which is crazy. We also had Home Depot. I'm not sure if you guys saw. You probably did. But they reported yesterday, and their stock ended up going ballistic. I'm not sure if you caught it, but it closed at 288 on Monday. And on Tuesday, numbers came out. It went all the way to 308. It was up 7% at its highest, and now it's building on the gains from yesterday. It's up 1.3% on the day. And they reported, let me see here, guys, if we can pull them up on the live news tab. Where are these numbers at, guys? Come on, work with me. Let's see here, guys. Net income, it looks like, was at $3.3 billion. So EPS at $3.81. Sales at $37.7 billion for the quarter, and it looks like customer transactions were down 2.4%. Same-store sales were down 3 to 4%, or they see full-year same-store sales down 3 to 4%. Not the best sign, but of course, that was probably priced in. Let's be honest here. And the Home Depot announces third quarter fiscal 2023 results, and they narrowed their 2023 guidance. It says here, what else, guys? Operating income, they see it full year at 14.1 to 14.2%, and they see full year EPS down 9 to 11%, which is not great. Let's see, anything else on guidance? Looks like they narrowed their fiscal 2023 outlook on sales growth from 3 to 4% in the red, so they're going to be declining year over year. EPS, again, 9 to 11% decline year over year. So their numbers weren't the best, I guess you can say, in terms of the year over year comparison, although that was already priced in. But they did report pretty decent numbers as they crushed EPS. It looks like the estimate was 358. It came in at 381. And they also beat on revenue, $37.71 billion versus $35.66. So yes, year over year numbers aren't great, but they did crush EPS and revenue estimates, which that took the stock to where it is now probably, as it was very beaten down heading into earnings. So keep your eyes on Home Depot. And the last one here, guys, we'll speed through this one, is JD.com. Let me pull it up and show you all. This one is a Chinese company. You guys probably know. They reported earnings, and it looks like here they did 92 cents EPS versus the 88 cents from last year, and sales came in at $33.95 billion, down from $34.24 billion last year, so pretty much in line with what they did last year. Let me see what else. I'm not seeing anything else here for JD, guys, but yeah, they reported their stock's up 8%, 7.77 to be exact when I'm watching this, guys, and it is reversing above the moving averages for the first time in a good couple of months. Not completely reversing or breaking out, obviously, but it's looking pretty decent. So keep your eyes on JD, up 8%, almost over $2 per share, and we'll see if it starts pushing past 30. If it does, that's where I'll start paying attention. Let me actually put my alert at 30 for now, and we'll monitor it, and we'll see what it does, as 30 was the high, it looks like, roughly from the middle of last month, October. So if we break out of there, maybe we do start reversing to the upside. But until then, we'll see. My alert set. Let me know your thoughts in the comments, guys. Hit that like button. Make sure to subscribe here on YouTube and follow me on X at Stocks Talk Stocks. Link down below. And you might as well get your free stocks from Moomoo. Just use that link or go to StockSurfS.com/Moomoo. Open up your account and fund it with your initial $100 deposit, guys. You get 5 stocks right off the bat, each up to $2,000, and you get a free share of SoFi stock as well, again, with just a $100 deposit, and fund your account at least $1,000. If you want to up the ante on top of those 6 stocks, you get 10 more stocks, each of those up to $2,000, totaling 16 stocks. So use that link down below or go to StockSurfS.com/Moomoo. And with that being said, guys, cheers. I'll catch you all in the next one.